Well, hello everyone. Kay Kim here from the Traders Club, TwoTradersClub.com, and well, thank you for tuning in. And today we are going to be looking at our usual market indices, including the financial sector here. Today, what I'm going to do is actually, usually we look at Spider, in this order, but today, let's look at the financial first, and then the Russell, and then the NASDAQ, Dow Jones, Spider, because the financial and the Russell might be insinuating something. We don't have anything yet. We're still in an uptrend. Benefit Dow still goes to buyers in the minor and intermediate and a primary term, but something's happening on the Russell in the minor term. So we'll look at that. And if we do have time, we'll look at Apple, Tesla, Google, Amazon, and Facebook in a rather expedited manner. On those, and we'll just look at those quickly. Before I get into it, I want to do a quick announcement for those of you who have been following my blog and watching my videos and coming to events. I appreciate that. Thank you very much. Well, 2014 has gone by very fast, and we're getting close to the end of 2014. We just have a 1.5 week left, and then December. Mostly next week is mostly going to be a Thanksgiving week, so the market is going to be closed. Same with December, so we don't have much days left here. But I just wanted to let you know that next 26th live midweek update is canceled due to Thanksgiving week, and if you signed up for that, you probably already got that alert that it is canceled for that. And then we'll have a one last live midweek update. If I get a chance in between those two, I'll do static videos just like what you're seeing right now. So what I do is I do live events every other Wednesday, and then in between that I do these static recorded videos like you're watching right now. So as far as a live event, in live events I tend to go much longer. I elaborate on things. It's very educational driven. It's a webinar. It's a webinar, and these static recorded videos that I do there. The purpose of that is just so I can get you guys and just share with you what I think the market is. Just giving you some technical analysis on where the market is at and few key stocks. So and in live midweek update we do cover all those things that we cover in these videos, but it will be much elaborated manner. So anyway, so we would only have one last one December 10th for the 2014, and then this one would also be canceled for the Christmas week here, 24th, and then January 2015 we'll resume regular schedule. If you haven't signed up for 2015 event, feel free to go here on my blog, or there's a link there if you're watching this video through my post, or you just go here, free webinar, and then sign up 2015, and you can sign up there. So I just want to quickly let you know, because I've been noticing that if you put your first name here and last name and your email, just obviously we're not going to sell your information, nothing like that. You can opt out anytime by replying any of these meeting reminders. So when you sign up and you click on the complete registration, it's not responsive right away. I think it depends on maybe what kind of browser you use, but if it's not responsive, just wait like 5 to 7 seconds, and then it will just go to the next page and saying that thank you for registering. But once you click on it, after you fill it out, it tends to just sit there and do nothing. And I'm like, what is it doing? And so you click multiple times, but yeah, and so I just want to let you know about that. When you do sign up for 2015 live midweek update, you'll get a meeting reminders hour before the meeting with the link, so you can come in and sign into to my webinar platform, and you can interact with me live, and you can ask me any questions during the session. And then if you can't make it, you'll get the alert on recording. So that's the benefit of signing up. Again, it's a free admission. It's free to do all of this. And so feel free to do that. What else? Was there anything else I want to say? Nope. All right, let's get to it. And if you want to get reminders of these static videos, not the live events, but these static recorded videos, just go to my blog and then sign up for the update of the blog, because every time I put up this video every other Wednesday, I do put a blog post there, and then you'll get a reminder for that as well. So, well, let's get to financial sector here. I'll go through rather quickly because sentiment has not really changed much since we've been talking about it. I've been covering these every Wednesdays. Again, go back and watch the most important lesson on technical trading we did on last Wednesday, the live event that we did. It was recorded live. I spent about an hour and a half and just really plowing, just really just elaborating what it means to use technical trading or technical analysis to our advantage and all that. And I also cover the market in that, and really though, nothing much has changed. Since I don't day trade ever, sentiment is not going to change in a day, or if sometimes in a week. I mean, sentiment has not changed. What I've been saying is benefit Dow continues to go to the buyers, I think, last 3 to 4 weeks. And so you can see we're still up there. We are getting to resistance level. Just because we're at the resistance level does not mean that it's a time to short. That's, I think unless you're just very, very short term, that's what you do, that's your game, that's great, but that's not my game, and I hate doing that because it's very, very difficult, especially in this long, I mean, if it works out, that's great, but it just you never know how, because there's so much support levels. We have support level here on the financial that could come down here and potentially move back up. We have that 50 MA could potentially be a support. We have 100 SMA could potentially be a support. So we don't know where it's going to be a support. If I put a Fibonacci level, those are also could potentially be support level there too. So I mean, that's why that's not my game. I'm not going to short here. So just because we get to a resistance level, it's not mean that we short here. But that's what it means is this is definitely level to watch. And when we pull back, as long as it pulls back and then bounce on any of these levels, it is considered as high or low. We still don't have a high or low as of today. It just went straight up. We actually don't have. It's been, sometimes when we move like that, like straight up, it actually is, this move is not that sustainable. And I'm not saying that just because we had a straight up move, we're gonna come back with a straight up down move. I'm not saying that, but I would rather see some higher lows and higher highs, so that we have somewhat established uptrend in the intermediate term. Obviously, we are in an uptrend in a primary term. Right? We see that. We have up and downs, in a primary term. And so that's great. But intermediate term, though, what do we have? We really don't have, looking at this daily chart, we really don't have any kind of higher lows there. So that is what I think that there could be when the seller shows up, and if this thing starts coming down, we really don't know where it could really find a support. So that's the reason why we completely closed. I think this week, last week, we completely closed all of our equity positions, and because of the financial, we're getting into that level of resistance. Also, Spider and all the indices are getting into the overbought stairs, which I'm gonna get to it here. So what I'm thinking is, obviously, we are above 10 EMA here, so benefit Dow still goes to buyers in the minor term, intermediate term, and primary term. But the question is, here, let me go to oscillators here real quick, and they all look pretty similar, all the indices. And if you look at this, you can see all of that, they're all getting to that level, right? Again, does this mean that they must roll over? No, that's not what it means. That's not how you use stochastic or RSI or MACD or any of these oscillators, indicators. You don't use for, buy and sell signal. They are subordinate to our price action. So when the price action continues to show us, strength here, and we are not sure what it's going to do, when we can go to these oscillators and say, hey, we're getting to that level, and if we start to see the price action rolling over, and we don't know that as of today if it's going to, and then this thing start to really, progress to the downside like this, then then there is big caution there in the intermediate term. So we are getting to the level, and what it is telling us is that I'm not sure if, I think we could continue to grind higher, but I'm not sure how much big move can really happen at this point. And especially, you know, when we get to the resistance level right here and to break this level, I think it'll be because I think the bulls pushed and they might be getting a little bit higher after this kind of push. So I think it might be, and again, I'm not sure. I would have to see tangible price action, but it might be nice to see pullback and let bulls rest a little bit and then break through, something like that. Then maybe we could have a higher low, because we still don't have a higher low as of today. So that's definitely something to keep in mind. Russell, one of the thing about Russell is that we got to this resistance level here, and we did put in equal highs here. The question is, and I think, and we are pulling back, and Russell is the only index with with bears that reclaim 10 EMA. We're just hanging around at 20 EMA. All the indices as of today, financial sector, the NASDAQ, Dow Jones, Spider, they're all above 10 EMA, right? But Russell is the only index that's staying up below 10 EMA. So benefit of Dow goes to bears in the minor term, but obviously in the intermediate term, primary term, benefit of Dow continues to go to the buyers. At this point, we're above all their moving averages. Again, the question is, when it does pull back, where is it going to find support? Are we going to find support in this vicinity here where there's a 200, 150 MAs residing? Or are we going to come potentially be maybe this level here, Fibonacci level, some of these levels? We don't know that yet, but once we get there, once we find some solid bounds, then we are possibly able to see what the levels is going to bounce. And obviously looking at the oscillators as well, we are getting to the level on all of it. We are at that level. And last few times when we were there, Russell, several times actually, Russell had a, see that? And we looked at this last week as well, and sentiment hasn't changed a lot. You can see RSI already coming down, and we already have a cross here on MACD, and stochastic already coming down. You can see last 3 occasions, once we kind of pass certain level, this thing did come back down to the lower band here. So, that's definitely something to keep in mind. Again, does not mean that this thing is going to do that. That's not what it means. It means if we do pull back, are we going to put a higher low? And that's the question that I am asking. That's what I'm looking for here. Maybe this week, next week, and see what are the levels. So because it needs to, sooner or later, it wants to form a higher low. It cannot go straight up. And you know what? Anything can happen in the stock market. Anything goes. I'm talking about in probability wise, right? So sooner or later it would want to create a higher low. If indeed it wants to go higher, it wants to put in a higher low. But if this thing comes down and then makes a new low, then obviously that would be huge cautionary signal. However, I think bears, they really needed to keep this as another lower high. They should have brought this down here, so then we have this resistance coming, and that could have continued with the lower high, lower low thing. And because for the fact that we actually made an equal highs and that they let bulls came all the way up here, I think bears are losing steam at this point as far as their this topping pattern here. Again, we talked a lot about it in the last video, so I don't want to go into it right now. So I'm still wondering though, because it looks like it wants to pull back, and where it's going to find support. And any of these levels, they can find support and can be a legitimate high low there. So, Russell giving us that insinuation, potentially the indices are possibly slowing down, and then maybe they're vulnerable at this point, right? So let's go to NASDAQ here. NASDAQ, again, we're still above 10 EMA. You can see the 10 EMA has not been reclaimed to the downside, right? So benefit of Dow still goes to buyers in the minor term, intermediate term, and primary term, obviously, because we are still in a form of higher lows and higher highs. So it is absurd to say that this market is going to crash up here when we're continuing to, be in this higher lows and higher high situation in a primary term. It's just, there are always people shouting out crazy things, and just completely tune those people out, and that would really, really help you so you don't waste your time wondering about that. I think when the Russell pulls back, I think good level for NASDAQ to potentially find support is maybe this level right here. Some of these are in that 50 MA, because last time when we pulled back, you can see it pulled back a little bit. We got to about 50 MA, and then we had another bullish run before decline. But again, the thing about it is we kind of went straight up, and that's kind of one thing that I'm kind of wondering about, is that we really haven't seen a legitimate higher low yet. I mean, here we at least had just little tiny higher lows, and that is a bit more sustainable. What I mean by that is that it can last much longer. When we start to create higher lows and higher highs like this in the intermediate term, that is much more sustainable as far as a trend is concerned, and that trend can last much longer. But when we have kind of a straight up move, we really don't have, that well. Because I mean, what is definition of an uptrend? Higher lows and higher highs. Looking at this daily chart, do we have any higher low as of today? We don't. We just went straight up. Higher low, legitimate higher low. Looking at a daily chart would something like this. That will be a legitimate higher low there, like something like this, like that. I mean, obviously, you might not have to do it exactly like that, but something like that, and maybe that 50 MA coming like this. That can be more sustainable as far as this thing can really, having prolonged, well-established option like we've seen here. But with this kind of straight up move, it's a bit vulnerable in my opinion. Again, price action is the king. So price action says that, we're still in a bullish term. Benefit out continues to go to the buyers in the minor term because we're above 10 EMA, and intermediate term above 50 EMA because we're above 200 SMA in the primary term. But I think might be, I think with this bullish move, straight up bullish move is what I mean, is something, in my opinion, they can't go that long before it, because it would eventually want to come back down and form higher low there. So that's kind of what I'm looking for, to see if they're going to come down and do that. Let's look at Dow Jones here. It's the same thing. We just pretty much went straight up here, and then this potentially be old resistance, new support thing possibly happening again. I'm not saying that that's what's exactly going to happen. When it does pull back, this is a level to watch. If that level breaks, that gap area right here, that could be that support again, and where that 50 MA is going, because the 50 MA tends to be good support when it pulls back here. Last time we pulled back here, 50 MA acted support. We got slightly below 50 MA, but we got right back up, and then 50, 50, 50. You can see how this thing continue to ride on that 50 MA here. So Spider, again, same thing. It just went straight up. We still don't have legitimate higher low here looking at this daily chart. And that's, I think that is disadvantage for the buyers, because a lot of times when the things go straight up, we get to a certain level and then things get very, very hectic. Again, that doesn't mean it's going to just completely roll over. It just means that we get to a certain point and then it just starts to be very volatile and just does a lot of up and down movement. This was a topping pattern, some sort of like a double top that was confirmed, but then it was rescued right away and just got right back up here. And then we started to form higher lows and higher highs. That is much more sustainable, and that intermediate trend can last much longer compared to when the move is just straight up without any kind of higher lows. And then that move does not last as long. So I'm wondering though, after this straight up move, are we going to maybe form a higher low and then do that? Because if we can do that, if we can able to establish something like that, then I think this trend can really be sustainable, and then we can kind of get into that kind of well-established uptrend, at least for the next several months. Again, calling top up here is absolutely absurd. I mean, there's always some sort of signals. Always. It's up here, down here, all the way through. There's always everywhere. I don't care where. There's always some sort of signals or insinuations everywhere. But again, we would have to put a weight on the price action itself and looking at these lows and highs. And obviously, we're still in an uptrend, higher lows and higher highs. And because of that, benefit of Dow continues to go to the buyer. So looking at all these indices, we saw that I think the spider is also getting to the resistance level. But what it really is saying with these, looking at these oscillators, is that this is a level that I think the bulls might get higher. You can see how MACD is also at that level, RSI is at that level, and they haven't progressed like Russell. They remember Russell is much down here. And so Russell might be insinuating something. Russell might be leading something, but I don't think this market is just gonna crumple down. I don't think that's what's gonna happen without the proper topping pattern. I don't think we should fear that. But I mean, can this be top and then maybe do this, come straight down and then do something like that or something? Yeah, but we don't have that data. We have always, when we do our analysis, we always do we always do our analysis with the tangible data, which means the data is at hand. Data is there that we can see, right? That's what I call it, tangible data, right? So let's say next few weeks we just come straight down and then we do this and then we start doing something like this and then we top some kind of topping pattern. Yeah, then there might be a topping pattern. Maybe this was a top, but I mean, how do we know that's what's going to happen? You see that? I mean, that, people say that that's going to happen here, that's going to happen here. It didn't happen. We're still in an uptrend. So until we see something tangible, we cannot assume such theory that this market is going to go to nothing. So I would continue to do your analysis in that sense, looking at the tangible data and looking at these primary term lows and highs, understanding that we're still in an uptrend, giving benefit of the doubt. Does not mean that, because I can't be arrogant and say that, hey, this thing is gonna go 250 and I know it for sure. I can't say that because I don't know, and I can't say that, hey, this is a top right here, man. This thing's gonna come right back down. We're gonna put in this kind of a neckline here, and then we're gonna put a lower high. Oh, this is it. This is a top. I can't say that because I'm just a man like you and I. Nobody truly knows. All I can say is, looking at this data here, is benefit doubt goes to buyers. And once we see a tangible data that can tell us otherwise, we continue to give benefit doubt to the buyer. Does that make sense? So hopefully, if you can do your analysis in that way, I think that you will see more success in your trading and finding good strategy for your personality and your style of trading there. So I think to kind of, I'm still gonna go through these pretty rather quickly. I can never make these videos under 10 minutes. It's impossible. I don't. Maybe I just talk too much. Maybe I don't know. But looking at all these indices, we just spent 20 minutes and looking through all of that. I would have to say, they all look bullish still. We still don't have any kind of topping pattern. We still don't have any kind of tangible data that is suggesting that this market is gonna crash. All we have is Russell might be, but the nullification process, I think, is still kind of starting to develop there. We don't have full confirmation though. So I think this is a level I would be a bit cautious though, not because I think this market is going to roll over, but because I think it's a bit extended. Doesn't mean just because it is extended, it does not mean it must roll over. But looking at oscillators, they are insinuating something. Russell started coming down a little bit. Financial sector is at that resistance level. So it's definitely a level to kind of keep an eye on it and just maybe if you've been holding some long positions, maybe close some positions. And then wait for a pullback, because obviously I really don't like to go long here. Again, I don't day trade, so if you day trading, you can go long anywhere, but I rather go long on the pullbacks than at the top. And again, this thing keep grinding higher? It can. I think it can continue to grind higher, but I think we're not going to see a huge move at this point. But I think if we're gonna see any huge move, it's probably gonna be some volatile move. And I don't think we're gonna just do this and come straight down, though anything can happen. But I think it's more likely we might get some kind of pullback and then this thing trying to create a higher low before going higher. And so that's what I think is gonna happen. Or we could see some kind of a volatility where we start to see some consolidation and then trying to figure out if it's going to continue higher or maybe maybe a pullback. A lot of times, a lot of consolidation does not favor the buyers in the indices. Individual equities, you see consolidation, they actually favor the buyers. However, it's interesting to see that a lot of times when we get a consolidation, a lot of times it results in the downside, at least for intermediate term, a little bit there. We get a little bit of consolidation there. And then this was kind of rising kind of channel, tight rectangle rising channel there that resulted in downside. It didn't break out to the upside. So what I've been finding out is that these indices don't really like consolidation patterns. They like higher lows and higher highs, because higher lows, higher highs can really get them establish something there. And that's kind of what I'm looking for here before accumulating some more long positions on the equity. So hopefully that could be helpful to you. And let me know if you have any questions, and you can leave any comments below. So let me go through these rather quickly here. Apple, phenomenal run, but again, we had a that's a, I don't know if I really called it a high. This is a pretty more solid higher lows, but we have a little bit of bull pennant here and then continue higher. I think the problem with Apple, obviously benefit that continues to go to the buyers, but it's not just Apple's problem. I think it's the whole market's problem is that a lot of these stocks were getting into that level. A lot of them that I look at. So I think that's the problem, is that we're getting to the level where, again, this does not mean that it's going to roll over, but it just means that it could start to pull back a little bit and start to put in some kind of higher lows here. You see how that, so maybe these indicators are insinuating something there, but definitely this is not the level I want to go long. If anything, I love this thing to kind of come back and retest this level. Apple loves to retest those new highs. Not always, but many times they like to do that. You can see old resistance becoming new support. Kind of did a little bit there, and then we kind of started testing there. And so I think, and I'm not saying that it's going to come all the way down here. We could just pull back a little bit and continue like this. I mean, obviously, benefit out continues to go to the buyers in Apple, and we would have to respect that. It would get my attention though if we come all the way back down here and then retest this level, and I have to see how it reacts to that pivot, and then that old resistance can actually become a new support. And also when it comes down here, and again, I'm not saying it's going to come down here, but if it does come down there, it will get my attention to go long, again, because I'm much longer term in my trading style, my trading duration. And also that 100 SMA did act as support in the past, right there. So if this thing comes back down here, kind of hit that 100 SMA, we start to see some kind of top bottoming pattern. I'd love to go long there for a couple months, and not, maybe several months to 6 months position trading. And I think we'll continue to give benefit out to the buyers on Apple as well. Tesla, this is a pretty constructive run here. But again, one thing that is to note is obviously, first of all, we did clear this resistance. Again, just because we clear resistance does not mean that it must go higher. What we need to do at this point is, if this looks like an equal high here, so what I'm looking for is if we can come and create a higher low, and if we can break out of it, I think that could be a confirmation for this thing to potentially have inverted head and shoulders. You know how people always say shenanigans like, well, just because everybody's watching, it's not going to play out. That's stupid. Don't say that. Why does the people say that all the time? And that's not even an analysis. How do you know? Like, people always say back in September, 2012, we had a head and shoulder formation. Well, it's not going to play out because it's everybody's watching it because everybody's talking about it, and it played out. And then NASDAQ, we had head and shoulders. March, and then this time, everybody's watching it, or so it's not gonna play out. And this time didn't play out, but we never had a confirmation either, though. Confirmation would have been this thing getting below that, so we never had a confirmation. So, and then once we started breaking above this level right here, and then we completely nullified it. So nobody knows. I mean, so best way to do sometimes is waiting for a confirmation. Sometimes you can go in a little early, depending on your time frame and your strategy, and anticipate the confirmation. But just because everybody's watching, it's not going to play out. That's nonsense. This was inverted head and shoulder. This was when we went long back here, and then we closed all of our positions up here. That was a pretty fantastic position trade right there. And I'm kind of looking for something similar. They don't look exactly similar, but you can see they have a similar price here. I'll do this for you guys. Here, if I just put a square here, do you see this? You got left shoulder here, head right shoulder. Again, these patterns, when you study these patterns, they're never going to look like a textbook pattern. They're not gonna give you this perfectly lining up so you can look at it perfectly and you can get in there in a perfect confirmation. Never. They're gonna have sentiment. That's what's more important. And you can see right there we have something similar to that. So I'll definitely watch out for that. Definitely can be a left shoulder, head, and a right shoulder. And if that gets confirmed, I think we can get a pretty good run, and then potentially be a next level of resistance. Potentially be here. I'll do some. You can do some Fibonacci work here, get to some of those targets there. But I think it's a constructive work so far from the buyers doing this, not rolling over. 200 SMA did act as support back here, and this is something that we've been talking about, that can 200 SMA be that savior for the bulls here in the TSLA, and it seems like we hit it 3 times, we bounced, got above this level, which was a neckline, became a pivot, and closed above, got confirmed, and then now what it needs is can it confirms invert head and shoulders, and that's something I'll be looking at to go along there. Google is still a mess. You can see where this is a pivot level. You can see this is old resistance becoming a support, and then becoming an old new resistance again, and then we formed this kind of a resistance here again. So we got lower highs and resistance line coming up. We just gotten below this low here, made a new low in the intermediate to minor term. So definitely I wouldn't be interested in Google until it gets above that level, and then stay above that. Then maybe that's something we can work with. Right now it's definitely not something that I would be interested in going long here. Would I short? No, I wouldn't short anything while the market is in bullish terms. So Amazon, we closed out our Amazon positions on 14th. What was that? It was last Friday. We closed our position right here. This was a position we actually held for a while. We went long right about here, and just had a lot of bad lucks with these earning shenanigans. But what we looked at was this level here. Let me, because people say stuff, and I wanna show you what we've been looking at, why we held through, because I want to make sure you know that I'm not making things up, because I'm not trying to sell you anything. Let's see here. It's crazy what people say and do, some of these videos, just so they can sell certain stuff. It's just sometimes it kind of sickens me how people use so much marketing tactics, Anyway, I don't want to get into it. So this was taken November, let's see, this is in November here, November 12th here. So what we're looking at here is that, hey, this is a level that it held so far. This is a weekly chart too. And then this is a horizontal support, and this is the rising support. So we held that here, but then we have this resistance line coming. So this arrow saying that, hey, this is where I'd like to close out our positions, recover some of its loss, and then be done with it. And so if this is Amazon here, if we go to weekly, you can see we came precisely there. So if I recreate that chart, this looks like something like this, and that one's a bit more stretched. So, and then looks like that. So it got up here, and so, and again, you can continue, and looking at it, looks like we're forming some kind of bull pennant right on the, and so this could break higher. This is potentially be bullish pennant pattern, and the 200 SMA did act as resistance in the past. So we're getting right there, but if the market starts, and I'm not saying that that's what, if markets start to see some weakness this week, like maybe some abrupt sell-off or something like that, we could fail. This thing could fail, and this could come back down. But we do have some of the support levels here. So, but the reason we close it out is because we're still kind of in this kind of a lower high happening there. So we do have, obviously, this big primary term, we're still in an uptrend, that's for sure. We're still in an uptrend of big primary term, but if we look at this right here, we're kind of still in a downtrend of this primary to intermediate, let's call that big intermediate term. So we're still in a downtrend, so we're kind of stuck here, right? And so we don't know if it's going to come back down here and can get stuck here for a while before it comes out. So, but I am definitely watching this. If the market starts to really get its thing going, because I think if we get maybe a pullback and then start to build that uptrend in the market, in those market indices, then I think potentially we could possibly do something like this in Amazon as well. And then we start to form higher low. And that's what you want to start to look out for, is a higher lows and higher highs, because this market isn't gonna go straight up. If anything you want to see sustainable, you want to see higher lows and higher highs. That's what is sustainable. That's what can really get you to really ride that swings or ride that position for 6 months to 9 months. And that's kind of what I'm looking for here. And so I'm watching Amazon, but right now I'm not interested until I see some higher lows and higher highs. But because we're still in this lower high territory, and that's a pretty prominent resistance here, and there's a lot of sellers there, and there's a bit of selling pressure going on. So if the market sees weakness, watch out, because Amazon could come back down. So just keep that in mind there. Facebook, we've been looking at Facebook, this thing right here, and I've been and I will end video again. 36 minutes. It went much longer than I anticipated. I'm sure you guys don't mind. So you got this weekly bearish divergence going on there, and that continued to be progressing to the downside. You see this, the pressure is still down. Price action is holding though. This old resistance becoming new support right here. So as long as we're above that, I think bulls can still try to get this thing to stay up. But I think the problem is once we lose this 100 SMA right here, and we got some band of support here, some of these levels, I mean, this could be big, because we have that this bearish divergence on weekly term. This can be seen as topping pattern, and this could mean correction for Facebook. So definitely a warning signal I wouldn't ignore. And again, it's being weekly term. It's going to take time to develop. It's not going to just happen overnight. You can see we've been just grinding. Market has been bullish, yet Facebook was not able to get up. It's because that pressure that we're seeing, these unknown, this is what I call unknown selling pressure, right? This hidden, clandestine selling pressure is seen there. Maybe slowly, secretly, the big buyers are slowly pulling out. That's why we probably form something like that. So that's definitely something that I wouldn't ignore. That doesn't mean that I was short here either, because for the fact that the market is in a bullish term still, and we still in a kind of we are in a primary term bullish, high primary term uptrend still, right? So because of that, and as long as market does not have a topping pattern, I don't care, because there are always certain stocks is going to start to roll over, and it's really difficult to find them. So I like to go with the general market. If the general market is a bullish tone, then I want to find these setups that are just going to give me some bullish, because I want to time it with the market. Market is a bullish tone. I want to find these setups has bullish tone, bullish setups, and then go long. And I don't want to find any short setups unless I see the market is really, having that topping pattern, and then it's going to be in at least, several months of bearish trend. But we don't have that. We haven't seen that. So that's the reason why I don't think this is a level to short anything. Again, unless you're very, very short term. So definitely. And also, that's the thing about it, is we have a weekly term bearish divergence on Facebook. And we also have it kind of on a daily term, and they're still coming down. You see that? So there is still pressure, selling pressure, this clandestine selling pressure coming down there, and that's something to keep an eye on, because again, I'm not saying that it's going to happen exactly what happened to Apple, but last time we can see we had kind of bearish divergence. This is back in 2012. Bearish divergence there on a daily term. This is daily, and then this is a very, very strong bearish divergence on weekly term. Look at, they're completely opposite. They're pointing opposite direction, going up, coming down. That's very, very strong. And not only we had that, we had a lot of other bearish signals at the time. So I'm just using this example to be cautious on this. When you see this, can this thing just completely ignore it and just go right back up? Yeah, anything can happen. We're talking about probability, guys. Anything can happen. But for me, I don't want to deal with that. I mean, we were long on Facebook. You know, that was what? That was up here. We went along right here, and then you know, we closed about 50% position right there and closed all of our positions somewhere. No, it was down. It was down here somewhere, and then we haven't touched it. Main reason we haven't touched it for, you know, several months or few months now is because we started seeing weekly bearish divergence. You see, that's the thing about it, is we had some move, but it just, you know what I mean, it just was not able to really get anything going. I mean, this would have been pretty good swing trade there, but you know, that was tough to kind of catch that after putting a new low. So you didn't know if it was going to make a lower higher or not. So that would have been just completely guess to have to catch that kind of move. So anyway, that's all for me. Thank you for watching all the way through. If you have any questions, feel free to leave comments below. I think that's about it. Well, you guys enjoy your evening, and I will come to you. Well, next week we're going to have live midweek update canceled, so I'll come to you the first week of December then. I'll try to put up an article or something like that if I see anything. So alright, have a great night and we'll talk soon.